So let me begin with the key development in the first quarter, the Iran conflict, which represents a meaningful external shock, particularly through the oil markets. For Vietnam, as a net importer of oil, the initial concerns were twofold: potential supply disruptions and inflationary pressure from rising fuel prices. However, Vietnam's response has been both proactive and effective. The government moved quickly to diversify supply sources, ensuring sufficient inventory through at least the end of May, while domestic production has been ramping up to provide an additional buffer. On inflation, several structural factors help contain the inflationary pressure. Vietnam is largely self-sufficient in key food items, such as rice and staples. Power generation is well diversified with limited reliance on oil, and the fiscal position remains strong, providing room to support the economy if necessary. Even under a prolonged scenario, with oil prices at around $100 per barrel for the next 9 to 12 months, we estimate a moderate impact, inflation likely rising towards the 4 to 5%, and GDP growth facing a drag of around 0.5 to 1 percentage point. Importantly, this does not yet factor in the policy responses. In our view, both monetary and fiscal tools still provide meaningful room, which we'll touch on in later slides. Overall, while this creates near-term headwinds, it is unlikely to derail the Vietnam growth trajectory. In the first quarter of 2026, Vietnam also went through a leadership transitions with a new lineup across key positions. What stands out is both experience and alignment. Across the leadership team, we see a combination of deep policy experience, strong track records in economic management, and a clear focus on macro stability and reform priorities. The shares of leaders with backgrounds in economics, finance, and business administration has increased to over 50%, while nearly a quarter have experiences in science, technologies, and engineering, consistent with a pro-growth agenda focused on more advanced sector of the economy. At the very top level, key changes include the consolidation of the General Secretary and the State President roles, alongside with the appointment of a new Prime Minister, Mr. Lê Minh Hưng, with over 20 years of experience in central banking and monetary policy, including a proven track record in managing inflations and restructuring of the banking system. In our view, the leadership team reflects a strong continuity in reform directions with a consistent emphasis on fiscal disciplines, financial stabilities, and institutional improvements. Importantly, this comes at a time when policy execution matters as much as the directions, particularly given the rising external uncertainties. This should reinforce confidence that Vietnam's reform agenda remains intact, policy execution stays consistent, and macro stability continues to be prioritized despite a more complex global backdrop. As I mentioned briefly on the previous slide, the recent election had resulted in a structural development, a consolidation of the leadership, with Mr. Tholam now holding both the General Secretary and the State President roles. Vietnam is moving toward a more unified structure. There are numerous positive implications from this development. Firstly, faster executions. So a more aligned system will likely reduce the coordination frictions, particularly in infrastructure, public investment, and regulatory approvals. Secondly, policy consistencies. It will likely lower the risk of mixed signal across institutions, providing a more stable and predictable policy path. And lastly, clearer external signaling. For foreign investors, we believe this will allow a unified leadership voice and improve confidence in long-term commitments. We have seen similar dynamics in China, where stronger alignment supported more decisive policy delivery. The key takeaway here is straightforward. Stronger alignment increases the probability of faster and more effective executions, which is critical for the next growth phase. To illustrate this dynamic, we can look at China's experience in the past. Following the leadership consolidation in the early 90s, China saw a marked improvement in execution capacity, particularly in infrastructure development. This translated into faster project implementation and more coordinated policy delivery across regions. The national trunk highway expansion, for example, accelerated dramatically from roughly 130 kilometers per year to over 2,400 kilometers annually. At the same time, GDP growth moved into a sustained double-digit phase for an extended period of time. The point here is not that Vietnam will replicate China's path exactly, but that there is a clear historical precedence. When leadership alignment strengthens executions, growth outcomes can shift structurally higher. And in that context, Vietnam's current transition could represent not just continuity, but a step up in policy effectiveness, particularly in areas such as infrastructure, industrial development, and reform implementations. This would naturally bring us to the Vietnam's policy framework. So we mentioned in the previous webinar about Resolution 79, and we just want to remind you again on the two major resolutions that have been introduced over the past 18 months. So Resolution 68 focuses on private sector development, while Resolution 79 targets the state-owned enterprise or SOE reform. And what matters here is not each policy in isolation, but how they interact. We are beginning to see a two-way dynamic emerge. The private sector expansion creates competitive pressure, while SOE reform lifts governance standards and improves efficiencies. At the same time, an important development this time around is the comprehensive and strengthening public and public-private partnership framework, which incentivizes a close collaboration between sectors. And as a result, we expect capital allocation as well as execution will become much more efficient for major projects or the national important projects. Taken together, this is shaping what we would describe as a coordinated growth architectures, where different parts of the economy will reinforce one another and all cylinders are firing up full potential.